Hey guys, welcome back to Everything Money. This episode is very near and dear to my heart. A couple years ago, Paul turned me on to The Little Book That Beats the Market, an investing handbook by the billionaire hedge fund manager Joel Greenblatt. I was drawn to this. I read the book. My 11-year-old has read this book, Paul. You're a big fan of this book, and you send a lot of people to this. Paul, wouldn't you say that investing in Little Book stocks is sort of like one-upping a general ETF? You're sort of creating your own ETF. So why were you so drawn to Joel Greenblatt's book, and why did you point me toward it, Paul?
Well, over the years, I've studied a lot about value investing, and I've studied a lot about investing in general. And I've found that when people get their own emotions involved, they tend to do worse. I just found that people did very, very well. They could beat the market by just picking a basket of stocks that have certain attributes that are value-based. And Joel Greenblatt are two attributes. One is a low PE, and two is a high return on assets. What he does is he takes the 3,500 companies, the top 3,500 companies by size. He ranks them 1 to 3,500 by PE and 1 to 3,500 by return on assets. He adds their rankings together, and then he buys the lowest numbered added together for each one. And you can go to their website, magicformulainvesting.com, and you can get the list based on whatever market cap. He does it for free as long as you sign up. I just believe that you can beat the market. Beating the market is simple, but not easy. And the hard part about it is emotionally, because this method will not work over 3 or 4 or 5 year periods of time when the hype train's on, which we're in right now. So if you're somebody who follows the hype train, you see your neighbor making 30% a year and you're making 14, 15, even though it's still 14 or 15%, you're gonna be like, but why is that person making 30%? I need to go do that. So they start avoiding this process. But by the time you get back into the process, the hype train's ended. You haven't been the first one to leave the room. The musical chair has ended, but you're left without a chair. You've lost a lot of money. Then you get back on the hype train at the wrong time. So I'm just a big believer in picking a process, sticking to it, no matter what happens, and going with it. And this is the way it works for Joel Greenblatt. Mo and I have our own methods that we use the same way, but we just don't disclose them because we want to teach a process that's actually with a thought process that gets you thinking to where you're going to follow the little book that beats the market, no matter what happens.
Yeah, I tell new investors, as we said almost on every video, Paul, we want you out there as a new investor. You probably want to put 80, 90% of your long-term investments into an ETF, SPY, VOO. If you want to one-up that, read the little book that beats the market and follow the magic formula, which I did. So on July 1st of 2020, I invested $150,000 into these 30 companies. And through July of this past year, 2021, Paul, I had almost a 70% return. And I have seen people argue, well, the whole market was crazy, but it did beat the market last year. This year's, so I rebought.
By the way,
Go ahead, Paul.
It's very interesting to me. They'll say, yeah, but the market was crazy. That's the same reason why your hype stocks did well. Exactly. The entire market was crazy. That's the funny part. The same argument I used as to why hype stocks suck is the same argument you're using for a fundamental value. You're right. The whole market was crazy. Now, what I will sit there and say is, if you're bragging that you're up 70% and that's the reason why you should do something in a 1 year period, that's a terrible argument. But that's why I look at it going over a long period. Now, how's it gone in the last 6 months, Seth? It hasn't gone very well, has it?
No, it has not. So here's my new list of stocks that I bought on July the 1st of this year. So you basically wait a year and you buy your new stock. So Paul, we've talked a lot about these and we love some of these. We've talked about Hibbett, Tupperware, Madison Square Garden. I think this was on the list last year. H&R Block. Do you still hold H&R Block, Paul?
I do. And HPQ and Viacom and Dick's. I mean, these are all companies that we like. And what are you overall up or down this in the last 6 months?
So again, I invested around $250,000 and I'm down. So let's see, that's 244. So yeah, there you go. So I'm down 8,000. I'm down 3.6% since the investment in July 1st. So the last 6 months, I'm in Sigma. I'm in Sage. Look at this Altria Group.
Guys, that does not include dividends though.
I don't think so. I think this is just general. Yeah, you're right. This is just general up and down.
So in dividends, you've probably gotten another 1%. So you're probably still down 2% or 2.5% on this company, on this trade so far. So, and how does that compare to S&P 500 total return? Let me look at this. So I'm going to pull up the S&P 500 total return, and the S&P 500 total return is up about 10 or 11% in that time period. So you're down quite a bit versus the S&P.
But see, that's the idea, though. The idea is you had 70% last year. This year, you're going to lose. And over 30 years, you will be winning. That's the goal. So you're doing it the right way, not looking at it on a year-to-year basis, because that's not what this is about.
Yeah, this was a surprise to me, Mo. I hadn't looked in a while. And Paul, I tell you what.
I love that you haven't looked, by the way, Seth. Because
I was just going to say, it's taken a long
day.
Yes, it's taken a long time to get to this. I guess, Paul, like literally sitting in a room with you making this show for 3 years, it's now to the point where, yeah, you always say this, I don't actually care because I've gone into a trusted system by a guy who's, and Paul, I think, would you agree that just in the past 6 months, by interviewing the people like William Green and Monish Pabrai, I believe in Joel Greenblatt and the system even more. I mean, I don't even think you and I even knew to the depths of what this guy really went into to make this system, investing over $30 million in back testing. I believe in it more. What do you think, Paul?
I always believed in it. It just made sense. Like if you ever try to back test any sort of system that involves good fundamentals, value fundamentals, we would be like, Mo and I have done this going back 24, 25 years.
Yeah. How many do you think we've done? How many different metrics? Guys, we literally spent like 3 months trying to find a back test that didn't work using value parameters.
It was funny. We would throw them out. We would throw them out when they only beat the market by like 2 or 3% a year. We're like, useless. Yeah. I mean, it was just unbelievable how much they beat over 25-year periods of time. And it's funny because we have people who say to us like, oh, back testing is bad. Sure, back testing can be bad. If you're looking for, we're not going in the past and saying, okay, what worked? We're sitting here saying, okay, what should work over long periods of time? Well, paying a low multiple of earnings, paying a low multiple of cash flow, and then others attributes that also matter, but we pick 3 or 4 or 5 attributes and that's it. And guess what? It works. Sorry, if you want to argue with me all day long about how that's, I'm fixing the data, great, you're stupid. I'm not fixing the. It's like sitting there saying, we back tested, and guys who don't cheat on their wives tend to stay married longer than guys who do. Oh, you're just trying to. No, it just makes sense. People who don't cheat on their spouses tend to stay married longer than people who do cheat on their spouses. People who walk around with. No, look at it recently. If you didn't wear a mask, are you more likely? Okay, maybe that's a bad one.
Not enough data.
How about this? If you are somebody who drives 100 miles per hour versus somebody who drives 65, if you pick 10,000 people who drive 100 miles per hour everywhere, 10,000 people who drive the speed limit, which ones are more likely to die in a car crash?
Yeah.
Does that mean all of them are going to die in a car crash? No. Does that mean none of the people who drive the speed limit? No. But it means overall you're more likely to die in a car. No different. No different here. It's not sitting there saying I'm forcing the data. It's just there are certain logical things we have to sit there and assume that there's certain logical things that make sense. And that's and for us, we looked at it this way and we go back 25 years, especially 25 years during some very major hype times, and it's still beat. I'm very confident in this. And if you don't believe in it, wonderful. It just makes me more money.
So, Paul, I had some folks in our community join me in this journey of investing in little book stocks. And I think as a new investor, they're a little sad. They're dealing with what I used to deal with, is like the sadness that, wait a minute, I invested in this. I'm supposed to make money. I'm currently not. What's the thought process? I mean, just remind us again about the disciplined thought process you have to have as a value investor.
I was in bed last night thinking about investing, and I was like, and I started to get frustrated, Seth.
Go on.
I started to sit there and say, I'm so sick of everybody nowadays saying they can handle down markets. They can handle not being in the market over short periods of time. This is 6 months and they're already frustrated. It just goes to show that investing is about really being disciplined long term. Like the idea of 6 months being down on this or not being in the market, I was like, wow, it doesn't even faze me. Doesn't even faze me because I buy into the process so much that I'm okay matching the market because I think these stocks are less risky than other stocks. I don't know. It's just, guys, this is why this channel is about a mindset. We're trying to repeat a mindset over and over. And if you stick with it over and over, it takes years. It took me years to finally buy into it. But now I'm so programmed that when I hear somebody does very well, very quickly, I go, oh yeah, it's probably something hype related. That's just it for me. I don't even think about it. It's just like so obvious to me now that the joke I have is if everybody in the world says the sky is blue, which they do, I immediately doubt the sky is actually blue. I go, probably not really blue.
You know, it's taken me many years. If you're out there and wondering how do you get to this state, it's taken me many years of listening to Paul on a daily basis. So in essence, Paul, I think reading more.
And you're not there yet, Seth. And you're not there yet. You still haven't seen. You still haven't seen a major bear market. Yes, you saw COVID, but when I say a major bear market, I mean one in which it goes down and stays down and keeps going down month after month, year after year, where you're like, what the hell? Because guess what? That's what Mo and I do now. Mo and I are now like, oh my God, what the hell? It's up again? How?
Yeah.
So this is the way it is. Like my S&P 500 short position, it doesn't bother me. Bothers my brother, but it doesn't bother me. In fact, I want to short more, but I've agreed not to. I'm going to short the NASDAQ 100, but I've agreed. To me, shorting when markets are up irrationally is no different than buying when markets are down irrationally. It's no different.
We will keep you updated on the Little Book stocks, my journey, and if you're following along in the community, it's a very much a mentality of let's stay calm, let's 8-pillar on, use the process that we're learning, because in essence, Paul, a lot of our people who are watching these videos, they don't have a process at all. Following an 8-pillar, then moving into due diligence. I wasn't either. So I'm still embracing our process. We hope you are too. If this resonates with you, you can join our community, and Paul will tell you how you can get the software right now. Tell him, Paul.
We created all this software because our users wanted to be able to analyze companies without having to wait for us to make a video. This software allows them to do that. The things you get with this software, you get everything on this main page, the 8-pillar, all these tools right here, plus all the stuff coming. You get exclusive daily content. That's 1 to 3 videos a day that made by us just for our users. You get access to Seth, Mo, and I. You get 30 years of financial data, over 30 years of financial data. But most importantly, you get access to our community. So our community is over 6,000 people who've already bought this software. It's in a very organized chat. You can go in there and talk about everything imaginable, even crypto, even Tesla, all your value investing ideas, even personal lives. We have people in there that are friends now. It's an incredible community. Join. All this is available for only $1 per day. There are 2 ways to sign up: everythingmoney.com or Patreon. The benefit of signing up directly with everythingmoney.com is we are not big enough to charge sales tax yet, so you're going to save on that sales tax for a while. And the other good news about the software is if you sign up today, every month the price to new subscribers goes up. So whenever you get your price, that is your price locked in forever. So this month it's $1 a day. Next month it's going to be higher. Last month it was lower. So when you sign up, we have people who are paying like 25 cents a day right now because they signed up so early. So sign up now, $1 per day, less than a cup of coffee, gets you access to all of this. If you can change your returns by 1 or 2% to the positive, or decrease your losses by 1 or 2%, this will yield hundreds of thousands, if not millions of dollars. $1 per day. Sign up now.
And if you're looking to trade stocks at a quicker pace, Little Book stocks are for long-term investment, but money can be made on any stock on these ups and downs. You can join Mo in the Bid and Ask Nation, and he will guide you through this process. Watch any of our videos, and you can learn more. That is our take on the Little Book stocks. I will update you next July. I will keep you updated on a 6-month period. We'll see where we go. Let's stay calm and 8-pillar on. Thanks for watching, guys.